At month end, we do kind of see a few more spots of resilience in certain Asian markets. How are you positioning going into the rest of the year, given the past few weeks and months have just been filled with so much uncertainty?
Good morning. Well, we did think the rally that we'd seen in equity markets throughout the last 6 or 7 weeks was a case of getting ahead of itself in terms of the outlook for the economy and particularly the outlook for corporate earnings. So we still have a really cautious attitude towards equity markets at the moment and have a mild underweight toward thinking about positioning within a multi-asset portfolio. And I think that will continue as long as we see the outlook for weakening growth, for higher interest rates, and particularly thinking about the uncertainty that's just going to come with the general global economic environment.
In terms of specific opportunities that you see in Asia, what are you liking at the moment? How does implications of where the US dollar go from here inform that?
I mean, yeah, admittedly, there are some bright spots around the world when it comes to investing. I think the resilience we're seeing within Asian markets, particularly within ASEAN, as we see the recovery sort of gain there in terms of the domestic outlook, offsetting some of the weakness you'd expect to come through from the slowing external environment, the impact on exports. So it is a case of thinking about the different stage that Asia is within that recovery story, or at least its economic cycle compared to other parts of the world, and how that might feed through into a better corporate outlook and better earnings return. Obviously, with that, when we think about the local market, the Asian market, we do think about the impact of China and the negative sentiment that does create towards the region. So it is a case of thinking about that a little bit separately within the ASEAN or the ex-Japan, ex-China market, and seeing valuations that are still relatively attractive, growth potential that could come through, earnings estimates that on a consensus basis may be a bit low, given the growth that we could see come through, and the fact that we may see the market behave a little bit differently this time than it has done in the past when they've been faced with these same external pressures.
I want to ask you, Kerry, our MLive Pulse question. Where do you see the most value in China?
I'll go find the other stuff. Sorry about that. I thought I should have said something slightly.
Our attitude towards China is very much of a long-term one. I think the greatest value is really going to come through when we think about the environmental side of things, the fact that there is a big commitment towards achieving some of these goals around emissions and the amount of support that will come through that sort of side of the economy. So anything that's really in line with those environmental goals, in line with those targets to bring down those emissions and the productivity, the technology gains that can come with that, I think is going to be one of the best investment ideas in China in the longer term.
So, Kerry, how are currencies going to play here? Obviously, strong dollar is a big factor in the world, but then within, say, the Asian region, we have different metrics here, different dynamics.
That's right. I think the headwind from the US dollar, the fact that it's sort of ticked up again as we've seen those rate expectations change a little bit in the last few days. But it is again a case of how central banks are positioned in Asia relative to what we're seeing in the US. They were, I guess, ahead of the curve when it came to that inflation outlook. They're going through that rate hiking cycle. They're potentially near the end of it. And we think about those benefits in terms of the difference in real interest rates between the two economies in Asia and the US. The fact that they're a little bit higher this time, that you're probably not going to see as much pressure coming through on the currencies as you have been in the past. And that might be a little bit less of a head when we think about the performance of these markets. Again, I think we're investing from a US dollar-based perspective into markets. Hedging costs are going to come through in a big, meaningful way in this. And so we think about that in terms of the return and income profile. But I think that the currency views are a little bit more stable, again, compared to what we're seeing now with what we might have seen in prior cycles where we had the strength in the US dollar. And again, perhaps be a little bit less of a headwind than we have been in the past, reinforcing that preference for that market within the region.